All right, and we're live.
We are live, outstanding. So this is Chad Boyle, CPA, Ascend FinTech Solutions. I'm here with my fresh haircutted, younger and smarter brother.
Oh
Inter-
man, I thought with the new haircut I was going to be better looking, but
Oh, no, sorry.
I'll try next week. I'll try
I'm,
something different.
I'm still undefeated in that category. So let's just dive right in. Enough with the pleasantries. We are talking about Pillar One, taking a deep dive into Pillar One and the numbers, having the right numbers. So last week, if you recall, we walked through the three pillar approach. So the three pillars: number one, correct the numbers. Again, having the correct numbers, we want to take action, and we want to take action based on the right data. So that is what pillar one is, and that is what we are going to dive into tonight. But we're going to go the next level down, do a double click into pillar one, and talk about it. So, what is pillar one, and what are the components that we're going to talk about? So, one is obviously the P&L, your profit and loss statement, your income statement. We want to dive into that, see what that means, and why it matters. We want to talk about the data dictionary. It's maybe a term you've never heard before. It is very important when you're talking about looking at your business, measuring it. It makes sure everyone is on the same page as you are evaluating the business, making decisions, and tracking the business. Speaking of tracking, you use key performance indicators, or our third point, to help track your business, see where you're on track, where you're not. It helps you to identify and flag areas that you need to adjust or go faster. So the P&L, the first place that we're going to dive into. So what should it look like? A P&L, I've seen many different versions of this. There's ones, that it's broken out into a significant amount of detail, and it's very hard to read. It spans 2 or 3 pages, on and on. It's hard to read, hard to manage, hard to draw any sort of good conclusions from it. Then there's ones where maybe revenue is just one line and cost of goods sold is one line. So that's not enough detail. So you got to find that middle ground where you want to have enough detail to where you sit down at your P&L, you know what's going on, you are able to track your business and your results. So let's just go through what are some, good things and what are some bad things when it comes to the P&L. So again, all revenue lumped in one line, that's just not enough detail. You got to really break things out into a meaningful way. So you don't want to break it out into every single category, but what are the key categories? What are the key activities that are driving your revenue and your profit? You want to make sure that you have a clear line of sight into those numbers on a regular basis. You want to look at labor not just as one number, but what is direct labor tied to your jobs? What is labor that's overhead? So, maybe the office folks, or if you take a salary, what your salary is as the business owner. That portion would be overhead. Then looking at, do you have equipment or vehicles in your P&L? So maybe you're renting equipment. Is that in the P&L in the correct place? Maybe you bought equipment and it's in your P&L, and you know what? It actually shouldn't be in your P&L because that would be considered an asset, which would not go directly into your P&L. It would go into your P&L through depreciation over a period of time of around 5 years. And then percent of revenue is a very important item on the P&L. Breaking down each line item, and knowing what percent of your revenue would definitely allow you to flag areas where maybe a cost is going up as a percent of revenue, and so it's essentially costing you more money than maybe it had last year. So just an overview of what are the key items and how to read your P&L every month. So again, when you sit down with this piece of paper, you should also, however you take notes, you got a legal pad, you have your iPad, you need something to write down because reading through your P&L, it's about taking action. You need to go through the P&L, identify, make sure like, hey, I see this number, I understand this number, I know what it's telling me. What do I need to do about this? So that's what reading your P&L in 10 minutes every month is really about. It's identifying the action that you need to take in your business. So revenue up or down, what are your gross margins doing over time? The operating expenses, tracking those, looking at variances year over year, month to month. Do they make sense? Do you understand why things changed? And then what, again, number 5, which this is key, what does this tell me what to do? What does this tell, what actions do I need to take? Because that is the whole purpose of getting your numbers right so that you can identify what actions you need to take and it will be the correct action. Now we have the P&L out of the way. Let's dive into a data dictionary, which may be something that people don't really talk about. But through you and your team, you want a shared language. So when you're talking amongst your team, you guys are all speaking the same language. You know what each term means, and you're all kind of going in the same direction, if you will. So we have kind of a with a data dictionary and a with or without a data dictionary and a with data dictionary scenario. So you can see like if one person says revenue, that may be different than someone else. So revenue, somebody may be accidentally referring to cash collected, which technically isn't revenue. Revenue is the is the work that is being completed and earned in the period. Job cost to one person may be job cost to another. So again, the whole point of the data dictionary is what are all the key terms that we use in our financial reporting and having an agreed upon definition of those that everybody is on the same page with. So it's and that's the key. The term, you can call it whatever you want as long as everyone is aligned on how and they're using that term in the same manner. That is the whole point of the data dictionary. So
Yeah,
here,
and if I can, before you jump into that, because I think
jump
that
right in.
you said it at the top, but I mean, this is something that I don't really hear anyone talking about. And I think, just to underscore, like, I think it is incredibly important in order to get the right clarity so that, as you said, when you're talking to people, like, everyone may have a different interpretation of a given word, and it's incredibly important that everyone is aligned and there's ultimate clarity so that you don't misinterpret. So I just want to underscore this because I think this is a very important point and something that not a lot of people talk about.
Yeah, exactly. I mean, yeah, it just helps with the communication. I mean, think about it. You have a new person on the team. You can hand them this data dictionary. I mean, they're going to get up to speed a lot faster. They're going to
Yep.
be, kind of rowing in the same direction, if you will, with everybody else by having a tool like this and something that's been predefined as a team. So
Yeah.
obviously, kind of the key process here is just to look at all these terms that we use in the reporting, how we talk about the business, how we plan the business, and just make sure that we have a clear definition that defines that and everybody aligns with. So now that we have our P&L, which is the standard report, we have our data dictionary where we all are on the same page as to what we're calling things and what we are referring to words and terms. The kind of the one another key item here are key performance indicators. So this is how you're looking at it. These are helping you to know like the performance of your business. It's flags, whether it's a red flag or green flag, how your business is doing. So again, not all businesses need to have the same KPIs. That's fine. but we just need the ones that are most meaningful to the business. So here, I mean, gross margin, that is definitely an important number. Like, how much of every dollar that you are selling are you keeping, and that you're able to use to cover your fixed costs? Obviously, revenue per crew day is an important metric. So all the days that you're able to work, are your crews productive, and are they generating billable revenue on all of those days possible? Operating cash flow obviously is important. Labor as a cost of revenue. We want to make sure that this is a key indicator. Is our labor costing more? Do we have a pricing issue? Tracking that can definitely help us to know that. AR days outstanding, very important. Need to track that, make sure that collections is a process. So if our days that we're collecting is increasing, we need to look at the process. Are we running the process as we should, or are things slipping through the cracks? And then job margin by service line. So job margin is important, but we need to look at that by the various service lines to see how that service line mix is influencing our results. If we're doing more jobs in a lower margin service line, that could negatively impact us, and vice versa. That will help us to understand our performance and numbers and what we're seeing run through the P&L. Then you can set up a dashboard, and like an example that we have here, to track these. Some you may need to track on a monthly basis, some you may want to track on a weekly basis, and some just may be daily. So it just depends on the KPI, but the main thing is defining your KPIs that are important to you and then tracking them in whatever that frequency is. I would say weekly is probably fine in most cases, weekly and monthly. But then you just want to see where you stand from those things from a year to date perspective. What was that last year? Just want to have those comparison points that will give you the insight you need to, again, take the action that you need to move your business toward your predefined targets. So that's pillar one. These are the three pieces and how they work together to get you the right numbers to take the right action in your business. It's all about the clean P&L, a data dictionary that aligns the team, and then the KPIs that will help you gauge your performance and know when you need to adjust or accelerate on various actions. So pillar one is where the financial clarity begins, and we are here to help bring financial clarity out of financial chaos. So if you want to have questions about this process, or you want this built for your business, just go ahead and book a free 30-minute call. Just go to go.ascendfts.com/calendar. And once you go there, there'll be a calendar that pops up. You can pick day and time that works for you. And we are always here and love talking about this process. So book the free 30-minute call at go.ascendfts.com/calendar. Well, I think that we did the deep dive into pillar one. We'll do a deep dive into pillar two next week. Anything to add there, Corey, before we wrap up?
Nope. Looking forward to next week's deep dive into pillar two.
Outstanding. We will do it. So pillar one is where it all begins, and pillar two, that's another fun one as well. And we'll look forward to being back with you next week.
Awesome. We'll see you then.
We'll see you then.